comprehensive analysis of Quanex Building Products NX. Through Warren Buffett's investment lens, one business quality and economic moat analysis. Quanex Building Products Corporation, NYSE NX, operates as a specialized component manufacturer for the building products industry, providing essential materials for windows, doors, cabinetry, and other architectural elements. Founded in 1927 and headquartered in Houston, Texas, the company has evolved from its origins in seamless tube manufacturing to become a critical supplier for original equipment. Manufactures OEMs in the construction sector. With over 30 locations across the United States and major global operations, Quanex serves leading manufacturers like Andersen Corporation, Geldwin Windows and Doors, and Masonite International through its diverse product portfolio. 1.1 revenue model and business operations. Quanex generates revenue through a B2B manufacturing model that includes component sales, primary revenue source, manufacturing and selling engineered building products including insulating glass spacers, vinyl profiles, window and door screens, hardware and cabinet components, custom engineering solutions, providing specialized design and manufacturing services that generate approximately $24.5 million in annual revenue. Value-added services, offering technical support, design assistance, and logistics solutions to enhance customer loyalty and retention. The company's customer segmentation includes residential window and door manufacturers, 62% of business, commercial construction companies, home improvement retailers, architectural firms, and building product distributors. This diversified customer base helps mitigate over-reliance on any single market segment. 1.2 competitive advantages and economic moat, manufacturing scale and expertise. Quanex operates manufacturing facilities across North America, with an annual production capacity of approximately 35 million window and door units. Their manufacturing square footage totals 1.8 million square feet across 6 locations, providing significant production scale. Company's vertical integration in certain product categories allows for cost control and quality assurance, technical capabilities, and innovation. With annual R&D investment of $12.3 million and 15 active patent applications in 2023, Quanex maintains a focus on product innovation. The company's engineering team consists of 87 specialized engineers who develop customized solutions for clients, creating switching costs through design integration and specialized product specifications. Customer relationships and long-term partnerships. Quanex maintains an average customer relationship duration of 12.5 years and a customer retention rate of 87%. These long-standing relationships with major OEMs provide revenue stability and create barriers for competitors trying to displace them from established supply chains. Quality, reputation, and industry presence. With nearly 100 years of industry operation, Quanex has built a reputation for quality and reliability. The company's product failure rate remains below 0.05%, demonstrating their commitment to quality control. However, according to independent analysis, Quanex lacks a durable economic moat. The company operates in a highly competitive industry with pressure from both larger conglomerates and smaller specialized manufacturers. While Quanex has developed certain competitive advantages, these may not be sufficient to create the sustainable competitive protection that Warren Buffett typically seeks. Table Quanex's economic moat assessment using Buffett's framework. Moat component Quanex. Status assessment, brand value established, industry reputation, moderate cost. Advantage manufacturing scale and efficiency, moderate switching. Costs, engineering integration and customization, moderate intangible assets, patents and technical expertise, moderate overall moat. Rating narrow, no moat to management quality assessment. Warren Buffett places immense importance on the quality and integrity of management when evaluating investment opportunities. Quanex's leadership team demonstrates several characteristics that align with Buffett's preferences. For capable and trustworthy stewards of capital, leadership experience and stability. CEO George Wilson brings substantial industry experience to Quanex. Having served in various leadership roles since 2011, before becoming CEO in 2020, his background includes positions as Vice President and Chief Operating Officer, President of Quanex Insulating Glass Systems, and executive roles at Lauren International and Federal Mogul. The broader executive team averages over 15 years of industry experience, providing depth of knowledge in the building products sector. Capital allocation strategy. Management has demonstrated a strategic approach to growth through acquisitions and integration. The company's acquisition of Tyman in 2024 represents a significant expansion of capabilities and market reach. Management has emphasized debt repayment following acquisitions, with $51.25 million of debt repaid in Q3 2025 alone. The company also maintains a $75 million share repurchase program, returning capital to shareholders. Operational execution. Management has focused on improving operational efficiency despite challenging market conditions. The company has achieved gross margin expansion from 24.0% to 26.8% year-to-date in 2025, demonstrating operational discipline. Leadership has identified approximately $45 million in cost synergies from the Tyman acquisition, above initial projections of $30 million. Shareholder alignment. Institutional ownership stands at approximately 87%, indicating professional investor confidence in management strategy. However, insider ownership is relatively low at 0.53%, which may raise concerns about alignment with shareholder interests. The company pays a consistent dividend of 8 cents per share quarterly, providing income to shareholders. Transparency and communication. Management provides regular financial updates and has implemented new segment reporting to improve transparency following acquisitions. Executives openly address challenges, such as operational issues in the legacy Tyman window and door hardware business in Mexico, demonstrating honesty about difficulties. Despite these strengths, some aspects might give Buffett pause. 3. Financial strength evaluation. Warren Buffett prioritizes companies with strong financial fundamentals, including consistent revenue growth, healthy profit margins, high returns on equity, minimal debt, and strong free cash flow generation. Quanex's financial profile presents a mixed picture when evaluated through these lenses. 3.1 Revenue growth and profitability. Quanex has demonstrated strong revenue growth in recent periods. It's primarily driven by acquisitions. Q3 2025 revenue, $495.3 million, representing 76.7% year-over-year growth, largely due to Tyman acquisition. Year-to-date revenue, $9,225, $1.35 billion, compared to $785.7 million in the prior year period. Organic growth. Excluding acquisitions, net sales increased by 1.4% in Q3 2025. Indicating modest organic growth, the company's profitability metrics show improvement, but with some concerns. Gross margin improvement. Gross margins expanded to 27.9% in Q3 2025 from 25.3% in the prior year period. Adjusted EBITDA margin, 14.2% in Q3 2025, slightly down from 15.0% in the prior year period. GAAP profitability. The company reported a net loss of $276 million in Q3 2025, primarily due to a $302.3 million non-cash goodwill impairment. 3.2 Return on equity and invested capital. Assessing Quanex's returns on capital presents challenges due to recent acquisition impacts and impairment charges. ROE based on Q3 2025 results, negative due to net loss and impairment charges. ROIC, estimated, likely depressed due to acquisition-related debt and impairment impacts. Historical performance. Prior to acquisitions, the company demonstrated reasonable returns, but below Buffett's typical 15% plus threshold. 3.3 Debt levels and financial health from a balance sheet perspective. Quanex shows moderate leverage. Total debt Q3 2025, $733.7 million. Leverage ratio, net debt to LTM adjusted EBITDA of 2.6x. Liquidity position, $337.7 million. As of July 31, 2025, consisting of $66.3 million in cash, plus availability under credit facilities. Debt covenant compliance. Leverage ratio for covenant purposes was 2.4x, well below the required 3.75x maximum 3.4. Free cash flow generation. Quanex's cash flow generation shows solid performance. Q3 2025 operating cash flow, $60.7 million, Q3 2025 free cash flow. $46.2 million, year-to-date free cash flow. 9M2025. $35.6 million, down from $59.9 million in the prior year period. The company's ability to generate free cash flow supports its debt repayment and capital return initiatives. Table Quanex Financial Health Assessment 2024-2025. Financial Metric Status Buffett Standard Assessment. Revenue growth 76.7% acquisition driven. Consistent growth, good profit margins 27.9%. Gross margin consistently profitable mixed row, ROIC negative impairment impact, 15% plus poor debt levels, 2.6x net debt. EBITDA, minimal debt, moderate free cash. Flow $46.2 million Q3 2025. Strong and consistent good for intrinsic value estimation. Warren Buffett focuses on intrinsic value, the discounted value of the cash that can be taken out of a business during its remaining life, rather than prevailing market prices. Estimating Quanex's intrinsic value presents challenges due to its recent acquisition and impairment charges. But we can utilize several approaches to gauge whether the business might be trading at a discount to its intrinsic value. 4.1 Discounted cash flow analysis. Applying a traditional DCF valuation to Quanex is complicated by the recent Tyman acquisition and non-recurring impairment charges. However, we can examine the company's projected earnings power. Analyst EPS estimates. Adjusted EPS of 69 cents in Q3 2025 forward. EBITDA guidance. Company projects approximately $235 million in adjusted EBITDA for fiscal 2025. Cash flow generation. Quarterly free cash flow of $46.2 million provides a basis for valuation. Using a conservative discounted cash flow model with a 10% discount rate and 3% terminal growth rate, we can estimate a rough intrinsic value range of $25 to $35 per share, compared to the current market price of approximately $15.29, 4.2 relative valuation metrics. Quanex's current valuation multiples appear attractive relative to sector peers. Price-sales ratio, approximately 0.3x based on projected 2025 revenue of $1.82 billion. EV/EBITDA multiple, approximately 6x based on projected 2025 EBITDA of $235 million. Price-book ratio, approximately 1.0x based on recent balance sheet data. These metrics suggest Quanex is trading at a discount to sector averages, particularly following the post-earnings decline of 11.2%. 4.3 Morningstar Quantitative Assessment. Morningstar's quantitative analysis provides additional perspective. Fair value estimate, $41.14. Current price, $15.29. Potential upside, 169% based on these figures. This assessment suggests significant undervaluation, though it may not fully account for recent operational challenges. 4.4 Valuation challenges and considerations. Valuing Quanex requires careful consideration of several unique factors. Integration risk. The successful integration of Tyman will significantly impact future financial performance. Cyclical exposure. The business remains exposed to housing market cycles and economic conditions. Synergy realization. The projected $45 million in cost synergies must be achieved to justify acquisition economics. Goodwill impairment. The $302.3 million non-cash charge may indicate overpayment for previous acquisitions. Based on the available data, Quanex appears modestly undervalued based on normalized earnings power. But the valuation discount reflects legitimate business risks and integration challenges. 5 Long-term prospects and risks. Evaluating Quanex's long-term potential requires examining industry dynamics, competitive positioning, and various risk factors that could impact the company's ability to compound capital over the next decade. 5.1 Industry outlook and growth potential. The building products market presents both opportunities and challenges. Housing market exposure. Quanex's performance is tied to residential construction and renovation activity, which is cyclical and interest rate-sensitive energy efficiency trends. Growing demand for energy-efficient windows and doors could benefit Quanex's product portfolio. Repair and remodel market. The aging housing stock in North America supports ongoing demand for renovation products. Quanex is positioned to benefit from these trends through its focus on innovative, energy-efficient building components. 5.2 Competitive threats and market position. Quanex faces competition from several fronts. Larger building products companies, major manufacturers with greater scale and resources, specialized component manufacturers, niche players, focusing on specific product categories, customer integration risk. Large OEMs may develop in-house manufacturing capabilities for critical components. Quanex's competitive position is reasonable, but not dominant, with market share in window components estimated at 24%. 5.3 Key risks and challenges. Several risks could impact Quanex's ability to compound capital over the long term. Economic cyclicality. Housing market downturns could significantly impact demand. Integration, execution, failure to successfully integrate. Tyman and achieve projected synergies. Leverage concerns, debt levels. While manageable, reduce financial flexibility in a downturn. Raw material price volatility, fluctuations in aluminum, vinyl, and other material costs could pressure margins. 5.4 Capital compounding potential. For Quanex to compound capital effectively over the next decade, several conditions must be met. The company must successfully integrate Tyman and achieve projected cost synergies. Housing market conditions must stabilize and eventually recover. Management must maintain disciplined capital allocation, prioritizing debt reduction and strategic investments. The company must continue innovating to maintain its competitive position. If these conditions are met, Quanex has the potential to deliver reasonable returns from current valuation levels. However, the company's lack of a durable economic moat suggests it may not achieve the exceptional returns Buffett typically seeks. 6. Final verdict. Buffett-style investment suitability. Based on comprehensive analysis through Warren Buffett's investment principles, here is how Quanex Building Products measures up against each of the key criteria. A. Understandable business. Quanex operates in the building products manufacturing sector, which is a reasonably understandable business model. The company's role as a component supplier to OEMs is straightforward to comprehend. Rating. Satisfactory. B. Consistent earnings. Quanex has demonstrated inconsistent earnings, with a significant net loss in Q3 2025 due to impairment charges. While adjusted metrics show profitability, GAAP results are volatile. A rating. Poor. C. Good. ROIC. The company's returns on capital are currently depressed due to acquisition-related impacts and impairment charges. Historical returns were likely mediocre relative to Buffett standards. Rating. Poor. D. Low debt, with a leverage ratio of 2.6x net debt EBITDA. Quanex maintains reasonable but not conservative debt levels. The company is actively repaying debt, which is positive. Rating. Fair. E. Attractive valuation. The stock appears modestly undervalued based on normalized earnings power, trading at a discount to sector peers and historical averages. Rating. Good. F. Long-term moat. Quanex lacks a durable economic moat, with only moderate competitive advantages that may not be sustainable long-term. Rating. Poor. 6.1 Overall assessment. Quanex Building Products does not meet most of Warren Buffett's investment criteria at its current stage. While the business is understandable and appears modestly undervalued, the lack of a durable economic moat, inconsistent earnings, and mediocre returns on capital make it unsuitable for a traditional Buffett-style investment approach. The company might be appropriate for investors with a specialized understanding of the building products sector, who are comfortable with higher risk and cyclicality. However, for investors seeking Buffett-quality investments, there are likely better opportunities elsewhere, with stronger competitive advantages, or consistent earnings, and higher returns on capital. Table. Quanex Building Products Buffett-style investment suitability, summary criterion assessment explanation, understandable. Business satisfactory. Component manufacturing is reasonably straightforward. Consistent earnings. Poor. Volatile. Quanex Building GAAP results. Impairment charges. Good. ROIC poor. Depressed returns due to acquisition impacts. Low debt. Fair. 2.6x leverage. Active repayment but not conservative. Attractive valuation. Good. Modest undervaluation relative to normalized earnings. Long-term moat poor, no durable competitive advantages. Overall suitability not recommended fails to many key criteria for Buffett-style investment.